Hey everybody, this is Andrea Jenson from the Cash Flow CFO, and you're listening to the Cash Flow CFO Podcast, the show that explores the financial side of running a business for people who want to maximize profitability and scale with confidence. If you want to make smart financial decisions based on data and put more of your hard-earned profits into your pocket, this is the podcast for you. This episode of the Cash Flow CFO podcast is brought to you by the Cash Flow CFO. Did you know that on average, business owners have up to 84% of their personal net worth tied up in their business? Our virtual CPAs and CFOs, as well as accounting and bookkeeping experts, empower business owners just like you to make big leaps that help them maximize profitability and scale with confidence. Visit thecashflowcfo.com for more information, and thank you for listening.
Hey, it's Andrea, and today we are having a solo episode. And, I'm excited to talk to you because it's been one of those days. I had a discovery call today with a potential client, and it really just reinvigorated my love for what we do here at the Cashflow CFO and how we help business owners to understand their finances. And it really, during the context of our conversation today, I had a light bulb that went off. And oftentimes, as a finance professional, explaining what it is that we do doesn't always come natural. And I'm sure there's lots of wordsmiths out there in the world, and they can explain things with such beautiful grace and ease. But us numbers people, it's not always our first, first strength, right? And so when I was having this conversation today, I absolutely just loved the way the conversation was going because it was leading us down a path of him expressing some frustration about, I have a CPA, I have a bookkeeper, and I still feel like I'm in the dark about making decisions for my business. And as our conversation was, unfolding and we were discussing the frustrations that he's having, and I was walking him through why that was the case, I thought, oh my gosh, this is something that I have to share with all of our listeners and viewers because it might be something that holds true for you as well. And so in our conversation, we were talking about, the fact that he has a tax preparer, he has a bookkeeper, but why does he still feel like he's kind of shooting from the hips when he's making financial decisions? Decisions such as, should I purchase another, service vehicle or machinery, or invest in hiring more team members? Or maybe should I put more money behind one of my marketing, lead generation activities, my channels that I'm trying to source new business from? And I was talking to him about it, and it really just kind of organically came out that the reason he's having these frustrations, and he's done all the right things, as everybody will tell you, have a good CPA that does your taxes and have the strategy and have the preparation dialed in, and have a good bookkeeper that's keeping accurate records, that's closing your books timely at the end of each month and providing you with your profit and loss statement, your balance sheet, your statement of cash flows. But a lot of business owners, they look at that information that they're getting and they go, yeah, I just don't know what to do with this. I can't use this as a tool to make decisions. And in our conversation, I was explaining to him, well, one of the reasons that you feel that way is because what you're looking at is a historical document. So even from the, having your bookkeeper close the books in a timely manner to you getting those, that's a historical document that you can't plan and grow your business on. And so one of the things that we talked about that's super important for business owners to have is, what are the tools and the tools and resources you have at your fingertips to create that strategy, that plan. And that kind of sounds like, oh, that's a big thing, but it's really not. So think about it in the way of, you're creating a forecast. You're saying, here's what I want my sales to be. Here's how I'm planning to get that. Here's what I did last year. I'm layering in seasonality. And here's the difference that I need to make up in my new marketing activities this year. And so you're really looking at, you're creating a plan and a strategy for forward-looking things instead of looking at it as, you're doing the sales and then you look at your reports and go, okay, it's a historical view. So you need the tools, right? Another tool that is a planning ahead of time is, what are your lead channels? What are the sources that you're bringing in new leads? And what's that sales conversion rate that you need it to be that you're planning on? So I'll talk a little bit more about those in just a minute. But for the moment, I want to look at, what are all the different tools that you can have as a business owner to help you say, here's where I'm at, here's where I want to go with my business. And having the operational piece is the bridge that closes that gap, right? But we have to have that plan in place. And before you can even start to put that plan together, you really need to understand, what are your 1, 3, 5-year financial goals for your business? And when you start there, then you can say, okay, let's just, for example, 5 million is your 1-year goal in revenue. Okay, great. Where are you at right now? Are you at 3 million? Perfect. So you need 2 million to close that gap. So which of your services are you going to be selling to cover that $2 million growth in the business to get you to where you want to be at the $5 million in revenue? So that's one piece of it. And then how are you planning? So that's not going to happen, in a straight line, right? That's going to happen in some variation of stair stepping. And so what we want to look at is, how are you planning? What is the activity that has to happen? And we were talking about, and I love this because I don't think a lot of business owners think about it in this much detail. But we were talking about, I said to him, what do you have in your sales pipeline right now? Let's assign a dollar amount to that sales pipeline. Let's just say you've got, $500,000 sitting in your sales pipeline right now. I said, let's look at, what is your historical sales conversion rate then? If your historical sales conversion rate, let's just say 50%, just to keep it really easy. If you were to close $250,000 of new business, do you have the team ready, standing by to be able to deliver on that? And it kind of made him think about things in a different way, because now we're planning for what's going to happen. And having a plan in place is what removes the stress and the worry and the weight of managing your finances, because otherwise we're kind of just throwing spaghetti at the wall to see what sticks.
Start scaling with confidence today. The Cashflow CFO is a full-service accounting and fractional CFO firm. So it goes without saying that our financial experts are phenomenal at number crunching. But more than that, they are expert communicators who will connect all those complicated financial dots in a way that just makes sense. We don't wait in the wings and check in every so often either. With our boutique approach, we position ourselves front and center, watching over every dollar that comes in and out of your business as if it was our own. So if your business is making money and you're ready to take it to the next level, but you're not sure you completely understand your numbers, and you're looking for that trusted guide to help you build a roadmap to reach your financial goals, it sounds like we would be a great fit. Visit thecashflowcfo.com and let's get started empowering you to build and scale your business the way you want to today.
And so once we had that conversation, I said, all right, let's pretend we're sticking with that 250,000 of new business. Let's look at a labor utilization schedule to say, how much money could you potentially generate based off your existing workforce? And does that number, that total, match the 250,000 plus what you've already sold, what you have booked and lined up? And then by looking at that, you're able to look at it and say, okay, do I need to hire more labor? And if so, what position? What can I afford to pay them? And at what time intervals, do I need to bring them on so that they have ample time to go through the onboarding process and are ready to be client facing? So that's another one of the planning tools, right, that we need to have. And so we also talked about, all right, if you're going to sell $250,000 worth of new business, let's pretend you're closing that tomorrow, then what are we looking at for the budget going into the business? So when we allocate, every dollar in revenue equals 100% that you have to divvy up into your business into the four big buckets that we talk about. And so the four big buckets we're talking about: cost of goods sold, cost of revenue if you're a service-based business, but we'll stick with cost of goods for this exercise, your marketing expense, your general and administrative expenses, and your profit. And the reason that we designate the profit bucket as its own category is because that's where we're paying taxes out of that. That's where we are reinvesting into growth in the business. We're taking distributions, dividends, depending on your business entity type, out of that. And that's where we're servicing debt, right? So we need to have those reserves. But when we look at the 100% that you have to allocate, we want to make sure that everything is being accounted for. And so let's just say 40 to 50% of every dollar in revenue you bring in is going to service the sale. So that's going to be your cost of goods sold budget. And so when we look at what is our projected revenue, what is our projected budget to allocate to cost of goods sold, we have to look at that and say, number one, can I deliver what I'm selling within that range? And if the answer is yes, great, check the box. If the answer is no, then we have two options. We either have to look at how do we lower our delivery expenses, our cost of delivering what it is that we're selling, or maybe our pricing isn't set correctly, and we need to look at that. So that's number one. Number two, we look at, out of the remaining, let's just say we said 50% went to cost of goods sold. Out of the remaining 50%, we're going to say 20% is going into our general and administrative. So that's going to cover our indirect labor, all of our overhead costs. That's going to cover, just about, it's easy to say, allocate your cost of goods sold bucket, allocate your marketing as any expense that the business pays to generate a lead. And then what's left over is going to go into your general and administrative expenses. So when you allocate that 20%, 10% goes into your marketing, and you've got 20% in profit. So that's a healthy business model. And if you can continue to replicate that as your business scales, you're going to be doing good. But these are the planning pieces. And this is why in that conversation, it just like warmed up my heart, because I was connecting the dots for him like nobody had ever connected them before. And I could see these light bulbs just kind of going, oh, that's what I'm missing. And that's what a fractional CFO does, right? Everybody in your finance division has a role to play. And most business owners, they have the bookkeeper, they have the tax preparer, the CPA, and they're still saying, I'm missing something. I'm missing information to be able to make managerial decisions about how I'm spending my money, how I'm allocating the resources that my business has in order to continue to grow and scale it in a responsible way, being a good steward of the money that the business is bringing in, and still achieving all of the financial goals that you set out to do. So in this conversation, it was just, it reinvigorated, my passion for why we do what we do. And really it just fills me up, right? When I can connect those dots for the business owners out there that are, busting their buns to make the sales and hire the team and motivate and train and do good work. And they're not seeing the profits. They're not seeing that bottom line number that's, reflective of all the hard work. And oftentimes it's really just getting them the tools that they need. I showed a management dashboard, and I said, Matt, look at this. It's just like driving in your car. You've got your gauges, and they're telling you, are you on track for what it is that you wanted to do in the business? You have to create the plan. The plan has to align with your big picture vision, right? Because you have the vision and you're backing it up with strategy, and that strategy comes at a cost, right? There's an expense to executing that big picture vision. And so having those pieces lined up, and then when you get your P&L and your balance sheet and your statement of cash flows at the end of the period, right? We're looking at something that could be up to 40, days old by the time you get those reports. Data is historical. Then we're matching that historical data up with what we had planned in our forecast and our budget. And we're saying, what are the variances? Where did I hit the mark? Where did I not hit the mark? And how do I need to reallocate resources so that I'm staying on track to either, if you didn't hit what you had thought for your forecast or you were not in alignment on your budget, you need to make up that difference in the next month. And so what tweaks do you need to make into your business so that by the end of the year, you're going to have some ebb and flow in hitting the goals that you had set out to hit. But ultimately, when you get to the end of the year, end of the period, you've evened it out, right? They say a lot of times, like, when an airplane flies from here to there, it's not a straight line, right? There's lots of things that make them move. But by the time they land, right, they've straightened out their flight path and they've made the corrections that they need to make. And it's really just the same thing in your business. So I hope this was helpful. And I hope, if it sparked anything for you and you want to chat more about it, send me an email, Andrea at the Cashflow CFO. Reach out, check out our website. You can submit a question there. I'd love to hear what you guys are thinking, what questions you have, what information you'd like for me to share with you, so that I can provide value and continue to help you to connect those dots so that you're not making decisions to run your business and scale and grow it from a place of no information and just kind of, making decisions in the dark. So thanks so much for spending some time with me today, and I hope you enjoyed this solo episode.
Thank you for listening. Don't forget to like and review, and we'll catch you on the next episode. If you're looking for more content or resources in the meantime, check out our website for information, blogs, and our I've Got a Spreadsheet for That series. That's thecashflowcfo.com. Again, thecashflowcfo.com. We can't wait to hear from you.